Good afternoon, everyone. We see a lot of people joining in. The numbers are growing good. It's a great, overwhelming response. Let's wait for another 1 minute and we'll just start off. Thank you for taking out your time today afternoon for this presentation. It's 3:31. We'll start exactly next 30 seconds. Great. So let me just start off. I see still a lot of people are joining in, but I guess we should start in lieu of the time and availability of yours. First of all, I'd like to thank you, all of you, to taking out time for this new opportunity which we have got. My name is Abhimanyu Arora. Uh, I've been with this organization from day one. Overall 25 years experience. Worked with banks like HDFC, HSBC, DBS, Singapore, and Kotak. And myself done my corporate finance course from IIM Calcutta. With me is Mr. Sameer Bhandari, who is co-founder and CFO of hBits. I would really like, Sameer, if you could just drop in and give a brief introduction of yourself, since you are expert not only in the Indian market and being a Singapore citizen and being a 20-year managing director of banks like Bank of America, Nomura, JP Morgan, and overall 33 years of experience. I'm Ahmedabad, Chartered Accountant Batch 1987, and I could speak on and on for you. But I guess people would really like to hear about you from both all the aspects.
Thank you, Abhimanyu. And firstly, thank you for joining this webinar. A very, very warm welcome. My name is Sameer Bhandari. I joined hBits 2 years back. A bit of background around myself. I was 34 years in banking. I worked with Bank of America, UBS, JP Morgan, and last 13 years I worked with Lehman Nomura. I co-ran sales globally across fixed income and equities. By training, I'm a chartered accountant and graduate from IIM Ahmedabad. I passed out in 1989. I joined hBits 2 years back to accelerate growth. So Shiv is the founder. So I joined Shiv 2 years back and I said, you know what, why don't we look at accelerating growth? Real estate, as we know, is a very difficult asset class. And we got together and said, you know what, we got to demystify this asset class and give best in class of assets to our investors. So since I joined 2 years back, we were at 125 crores, 130 crores of AUM. We are at almost 365 crores. And after this asset, we're going to be at 430 crores. And I guess what we excel in is not only identifying the property on entry, but it's all about the exit, making sure that we can exit the property at the right price and making the IRRs which we promise to our investors. Typically, this asset class gives anything between 14 and 17% IRRs, and that's what we want to give to our investors. But before I pass it on to Abhimanyu to talk about this property specifically, I just thought I'll take a step back and talk about global markets and what's happening. Fed obviously last week was very volatile in the global stock markets. People were not certain what's going to be happening in the US. The Japan situation was very unstable with BOJ increasing interest rates. But I think what's happened in the last week clearly gives me a foresight of if I have to see what I think the Fed is going to do. I think the Fed is going to cut rates this year. Earlier on, I was thinking we'll cut rates by 75 basis points. But given what happened last week, I actually think they'll cut rates by anything between 100 and 125 basis points. So they should cut rates by 50 basis points in September and maybe another 50 basis points going into this year. What typically happens is the RBI typically will follow the US markets and they will cut interest rates. And what it means really for us then is as RBI starts cutting rates, it also helps the commercial real estate market because the cap rates keep coming down. So I do think this rates coming down is actually going to help the commercial real estate market a lot. If they cut by 100 basis points, I think the commercial real estate market gets helped by at least between 5 and 7%. So going into this scenario, I truly feel this is the right time to get into commercial real estate. This is the right time to invest very big. In fact, I've been telling my acquisition team that this is the time to actually buy into real estate. And we bring this opportunity, which Abhimanyu is going to talk about. I think is one of the best opportunities for us. Microsoft is the tenant. It's a $3 trillion company. And I think going forward, this property could get IRRs of anything between 14 and 16%. So let me stop there and pass on to Abhimanyu to talk specifically about the opportunity. Thank you. Abhimanyu, you're on mute.
Thank you, Samir. I was actually thinking to do a kind of a quiz on who could be the $1 trillion MNC, but I guess you just mentioned about Microsoft. So let you know, guys, that Microsoft has the largest market cap in the world. So that's why it's got $1 trillion, market cap. It's, I guess, as equivalent to India's GDP. So that's how it is. So that's why we named it $1 trillion MNC. Let's quickly run through the property. It's based out of Pune. Entry yield is 8.75%. 5-year average yield is 8.5854%. Expected IRR is around 14.53%. Licensee, as Samir mentioned, it's Microsoft. It's a 5-year agreement tenure. We have collected 9 months security deposit, and it's a 30 lakh rupees investment, which we are talking about. Just to, as we'll give you a quick overview, Microsoft is located in Pune in 3 locations. One is in Kharadi, another is in Baner, and third is in Yerwada. So Yerwada is the location which is the most matured location next to the station and airport. This slide is very important, and I'll being into this particular wealth side, I like to quickly pick up only few points which would really help you to think that this property would really give you good returns and cash flows in the future. If you look at the bottom part, vacancy 15.88%, what basically it means is that how much is the stock available and out of which how much it is vacant. So if I talk about the entire Pune office market, the vacancy percentage is 15.88%. Vis-a-vis, if you look at the top right side, which says SBD, which is Southern Business District Northeast, Kharadi, Viman Nagar, and Yerwada, it says a vacancy percentage of 14.5%. Well, Kharadi is a new location. It's kind of upcoming, and there's a lot of stock coming over there. Viman Nagar is data, and then is Yerwada. You'll be surprised to know that in Yerwada itself, the vacancy percentage is, I guess, less than 2%, which clearly clicks the particular check box that this location is very, very much in demand, and there is no transactions happening in that particular location. There's no space available in that particular building. As well to mention, this particular building, so let me talk about Microsoft. As I earlier mentioned, years in business 45, market cap 3.1 trillion. We all know what market, Microsoft here to offer. Global ranking market cap number 2. When I looked at the Fortune 500 company, they are among the top 25, 30 companies in the world. That's about Microsoft top acquisitions. It's just like, this presentation will be shared with you. Hence, it's just a kind of a quick information available for you. I like to quickly bring you these information about the commerce zone Yerwada. Yerwada, there is basically one particular complex called commerce zone, which is called 8 buildings. We're doing building number 1, and that we are doing on the 2nd floor, where the typical floor plate is 51,000 square feet, where Microsoft is available. These are the pictures. If we look at the car park, the entire picture, this entire construction of this particular location and this commerce zone is done by K. Raheja Group. When we talk about this typical floor plan, 201 and 203 is the one which is occupied by Microsoft. And again, a good news is that there was another company which was available over there, which just left, and Microsoft has the right to offer it first. So Microsoft is as well coming in unit number 202. In addition to this, just to let you know, there are additional 2 more floors in the same building. Microsoft is picking it up. K. Raheja Corp, I guess we are aware of what the builder is, among the top 5 builders in the country. Just to let you know, in Commerce Zone, there's a 2.8 million square feet stock, of which 1.8 million is with Mindspace REITs. Automatically, again, gives you a kind of an indication that this kind of a paper, this quality paper is parked to REIT, so it's always a AAA rated paper. Location is a very important point. As you see, Pune railway station is around 6.6 kilometers. Uh, Airport is just 4.3 kilometers. Yerwada metro station is at 3.7 kilometers. It gives you a good sense how the connectivity of this particular location is. Top tenants in the campus: TCS, UBS, we, Johnson, Tech Mahindra, all the names which we are known of. This is a very important slide for everyone as an investor. If you look at these particular transactions of leasing, uh, Panchsheel giving a rental at 119 rupees, Panchsheel at 135, Global Square 97.2, Mutha Tower 120, Commerce Zone Building 4 at 102.4, and our rent is 92.62. Well, a lot of people come back and surely ask me this question that, what is this? It's a lower rent. So how do we help to, how we are getting a lower rent at the end of the day? But let me give you a kind of an insight of this, which is basically information and knowledge. Getting a lower rental tenant helps us in 3 particular aspects, and for you as well as in terms of the investor. It helps us to lower down the base price of the seller. If the seller would have come to us in terms to a particular price, we negotiate the particular person in terms to a particular yield, which automatically helps down to lower down the base price, which you will see in the upcoming slide, that what the price which we have got for you. It as well as gives you security that tenant will stick in this property for a longer horizon. In addition to this, just an additional information, furnitures and fixtures of this particular property is done by the tenant. As we mentioned, 201, 203, 5-year contract each. It's the same thing. In one of it is 6% every year escalation. Another is a 5% escalation every year. We have collected a 9-month security deposit, 5-year agreement. This is the overall cost which we are talking about. And on the left side, if you see, the price mentioned is 13,620 rupees a square feet. Well, while I was traveling a lot of time to Pune and I did a bit of research, of course, my acquisition did much better than there. Uh, Even under construction property towards Pune in that location comes at a pricing of 13,500. What we see and envisage, and of course, the valuation report should be on the way, that currently the valuation of this report will be somewhere close to 15,500 or 16,000. That automatically showcases that your entry price point is approximately going to 10 to 15% discount to current market values. Well, rental yields like 7%, 8%, 9%, honestly, you can get it anywhere. But as an investor, you should be focused to as we look at this very micro point, that what is your entry price point. This as well showcases the total ticket size of the property. Stamp duty, registration, we have collected property tax 5 years in advance, legal fees, brokerage, acquisition fees, reserves, total acquisition cost, and hence the ticket size of this entire property comes to 62.97, or I should say 63 crores in totality. This is how the financial modeling sheet looks like. If you see the consolidated rent, that is of course between unit 1 and unit 203, year 1, year 2, year 3, year 4, year 5, the consolidated rent every year is going up, which showcases the real information that the escalation is kicking in this particular Excel sheet, and hence every year the rentals will go up. Other things will surely, there's a property tax reserves which we have kept aside. Indeed, we have as well taken into a slightest information the security deposit which we have collected from the tenant of 9 months. We have parked as a fixed deposit, and the fixed deposit which will give you interest rate is as well going to be a part of your cash flow. Well, this is again a very important calculator for few people just to understand. It says a growth sensitivity calculator. I should say it a price sensitivity calculator. That in this particular property, if we are assuming a 6% appreciation year on year, then I'm expecting a targeted IRR to be 14.53%. That clearly shows that if I park in 100 rupees today, in the fifth year, I'll be getting 177 rupees. Well, 2 points just to add in this particular and to give you a kind of a confidence. Number one, that 15% discount to current market values has not been adjusted in the Excel sheet. Second, we have purchased this property from an investor who, which 10 years back had purchased this property at a pricing of around 4,500 and sold to us at around 13,600, which clearly shows a CAGR of approximately annual returns of 10 to 11%. Having said that, we've just kept 6% over there. And automatically, you can see these are all conservative numbers where we'll be surely able to achieve the 14.53% targeted IRR. Well, that's our management fees, 1% management fees, and performance fees is 15% over 10% IRR. That is the hurdle rate. Well, those are the time which has gone about the exit fees. But this is the time when we are starting talking about the performance fees, which clearly shows that if we perform, then we are able to get the particular fees, which clearly again shows that if you earn, then we earn the money. Well, a lot of people as well come back and ask me that how do you source your properties? Well, deal sourcing is of course not an easy task. It gets in a lot of requirement. If you see deal sourcing to evaluation to shortlisting and transaction, it well, if I get 100 properties or probably, uh, 200 properties, I'll end up only choosing one or two property or maybe three properties of the entire lot. That's our expertise with the acquisition team and what they have a different checklist on that. Investment synopsis, 8.75% entry yield. Tenant is Microsoft India. 8.54 is the average yield for 5 years. 14.53% is the expected IRR. Commerce zone, Yerwada, building number 1, second floor is the location. Well, as Sameer clearly mentioned, Sameer, if you really like to look, talk about again about this particular slide, which you actually, mentioned earlier, and I'll further highlight and further.
Sure, Abhimanyu. Thank you so much. So right now our AUM is 365 crores. After this property will be at 430 crores. Um, the founder, Shiv Parekh, comes from a real estate family. The family has more than 45, 50 years of cumulative commercial experience. I have experience of close to 35 years. And overall, I guess the team, so we have a team of almost 64 people right now, across people who've come from different areas of businesses, and I have more than 200 years of cumulative experience. I think we are one of the only fractional players who've actually exited a property and given an IRR of 17.54 crores. We have presently more than 100,000 registered users on our platform, and this is growing every day. In fact, I would not be surprised today if we have almost 125,000 registered users. So we have people with a lot of experience. We have offices in Mumbai, Bangalore, Singapore, Ahmedabad, and Delhi, and we continue to expand our offices everywhere. In fact, in the future, we also plan to expand and go into the US and Dubai. Let me stop there and pass it on to Abhimanyu. Abhimanyu, we can't hear you.
Sorry. Well, it was a proud moment which, happened, and we did an exit of a property at 17.54%. On that particular brochure, we had mentioned targeted IRR to be 15.54, and we delivered 17.54%. Well, keeping all this particular package and picture in one place, that's how your investment process starts. All you need to go and log in into hBits website, do the KYC. Once the KYC is verified, automatically there'll be a digital EOI which will come into place. EOI stands for expression of interest, that you're looking forward to express your interest in this particular property. And by transferring a 5% token of your money, which I mentioned earlier, the minimum ticket size to be 30 lakhs. By transferring 1.5 lakhs, you show your interest in this particular property. Further, that's how the looks, and you start earning rentals into your account every month, and property appreciation at the 5 years when it is sold, it as well comes to you. Well, that's how the structure is all about. We create a particular SPV of which is basically specially owned, and the property is registered on that particular SPV. Investors like you are the co-owners of that particular SPV, and we manage that particular SPV with the help of giving you a particular dashboard which is active. Once the dashboard is active, being an investor, you'll be able to see all your TDS certificates, all your downloads, all your uh, anything which you would look forward to receive as an investor. This is the investment dashboard, how it looks like. To give you a concise, this will show how much investment you have done, what's the kind of returns which you're getting yearly, monthly. It will show a cash flow statement in terms to what your rents are, what your surpluses, what your outflows are yearly. And it will give you a clear picture, understanding that what kind of returns you're making at any given point of time. These are the properties which we have done so far. These are all located, mostly located in Mumbai. We have done property in Bangalore. We have done a property in Pune, which is currently another Nasdaq property, 90% funded showing, and we are about to close that property any moment. And this is another property which we have got in Pune, which is next to station. We're looking forward to as well get ourselves property in Bangalore, Mumbai, Pune, and other more locations. We have talked about the exited IRR of 17.54%. Vikas is our CTO. He is a director of engineering, and he actually joined us from the company called Farmeasy. CMO is Mr. Somil Parekh. He's joined us with a company called Farmeasy, and taking all the digital and the things dashboard, how you're seeing, how it's been changing. Well, again, a very important slide to look at. Our banking partner is ICICI Bank. Taxation and structured partner is Deloitte and PwC. Leasing partner is JLL, Anarock, Knight Franks, and all the best companies in the world. Legal partners, because it's a property which is in concern, so we need to have to property vet the particular property. Shardul Amarchand Mangaldas is our legal partner, and of course DSK Legal and CRL. They are among the top 5 law firms in the country. Whatever data is mentioned in this particular presentation is coming from a source of CRE metrics. Trusteeship is our universal technology, and of course, when we talk about our payment gateways, is coming from Zoho, Lead Square, and other places. Overall, we are talking about the 3,000 crores assets managed, which is, of course, in relation to Raycon India, which is our partner company, parent company. We have been in the news. Well, the exact right one, which we see is the kind of interview happened with Shiv, with CNBC when we did an exit of 17.54%. Of course, there are many more, articles which you can surely log into our hBits website, look at the media section and as well as the blog section. You will be able to get that. Well, I'll open this particular call for the Q&A round right now. Sameer, shall we start with the Q&A?
Yes, please.
Yes, please. Thank you.
I guess the first point, Apple has the largest market cap, not Microsoft. Yes, which is why we said Microsoft is the number 2 company, but between Apple and Microsoft, there's a tough competition on which is going to be the largest market cap, but fully agree as we speak. Thank you.
Second one is, why are we getting discounted entry price? Well, let me take this particular question. Why is the discounting entry price? That's how we actually look at the earlier part of the slide. We mentioned the rentals in this particular property is coming to around 92.63 paisa, which actually helps us to reduce the base price, which helps us further to get the discount on the earlier property, on this particular property. I hope that would make the answer to this. Mr. Santosh Kumar Chaurasia has asked, what are the risks involved in this particular project? Sameer, you like to take this particular question?
Sure. So, Santosh, there are actually no risks really involved at all because this is a completed property. Microsoft has an agreement for 5 years. So, I would say there's really no risk unless you think Microsoft will default. But otherwise, I don't see any risk in this project at all.
Uh,
The next question is the investment process SEBI regulated? Yes, it is. SEBI came out with the regulations on March 8th, and we are in the process of registering for the SM REITs, which should happen in the next 1 to 2 months. The next question by Nandan: what happens with the SM REITs coming into effect? We're going to migrate all these properties into SM REITs, and they're going to be listed on the NSE or the BSE exchange. There's one more question around the progress of the Cybercity project at Magarpatta. I've shown EOI for multiple units paid 3 months ago. Yes, we do understand. Uh, as you know, we protect the interests of the investors. We are waiting for one more document from the seller, and we've been pressurizing them to give us the document quickly. They haven't given that, and that's one of the reasons we haven't called for the money. So it's really to protect the interests of the investors. Your money lies in the escrow account, so it's very, very safe. Uh, so early next week, we should know because we're just waiting for that one document from the seller.
Another question is, what is the safety of our money?
I mean,
Well,
the money is very safe. It lies in the escrow account. So there is no question that anyone can actually touch your money at all. So it's, I would say, 500% safe.
is the investment process SEBI regulated? I guess Samir has already, answered that. Yes, it is SEBI regulated. What is the ticket size? It is 30 lakhs to talk about starting investment. Do the financials currently include rent from unit 202? What happens if the micro doesn't rent unit number 2? Well, we have only blended in only for 201 and 203. So 202 is, of course, not part of this particular presentation or any financials attached to it. Well, as a matter of fact, but yes, I'm just giving an extra information over here. Microsoft is as well picked up another 2 more floors in the same building and will surely picking up 202 as well. But that's going to be a different entity or probably the opportunity altogether. Right now, we're just speaking about unit number 201 and 203. Samir, this could be the question for you. What are new regulations covering fractional ownership expected? How it would impact the investments?
So the SM REIT regulations are already in. March 8th is when SEBI came out with it. Uh, there is no impact really because we are going to migrate all these investments into the SM REITs model, and they're going to be all listed on the exchange.
I saw a 30 lakh as minimum investment. Can this be paid in installments or there are any other costs? Well, at this moment, when we sign the EOI, we only ask for a 5% token amount of money. For this particular property, we would be asking the balance amount of money, which is going to be 28 lakh 50,000, somewhere around 10th or maximum 15th of September. That's the latest which we are talking about. And sure, we'll be able to fill that particular property. So that's the one is required because unless we don't have the entire money, we will not be able to register the property. The next question is, when the performance fee kicks in after 10% above 10% hurdle rate, is 10% of total profits or only profits earned beyond 10% profit? Well, as the mathematical term and the performance fee says, 15% hurdle rate over 10% IRR. So anything, any kind of earning which is there below 10% is, so first 10% we don't charge you anything. It's about above 10%, we start charging you 15%. If on a matter of fact, let's say we do achieve 16% targeted IRR, the first 10% we don't charge you anything. So 16% minus 10% is 6%. And 15% of 6% will be 0.92%. That's going to be our pay charge on that particular proposition. Mr. Sridhar has asked, have raised question on status of the acquisition of property in Magarpatta city. This would have shared EOI 2 units and May 24th. There is no progress. As Sameer has already just answered, we're just waiting for one particular document. And again, to reiterate and mention, it's actually in the interest of all the shareholders that we collect each and every document in advance before we register the property, because it's not just entering into the property. We have to as well sell this particular property for you after 5 years. And there should be a very seamless and a very comfortable move for you in this particular proposition. Mr. Nitesh Jana asked, what are the process of investor wants to liquidate? Well, just to let you know, there is no lock-in period for you. Having said that, as I come from the wealth side of business, if your investment horizon is just 1 year or 1.5 years, I will not suggest you to park money, because this is a 4 to 6 year kind of a portfolio. Well, as per the current norms, when we talk about less than 3 years is short-term capital gain tax, above 3 years is of course, long-term capital gain tax. With the new things coming, it's a different picture. But if you want to liquidate, you can surely get in touch with your relationship manager or investment manager, and we will help you to liquidate the property in less than 30 days.
In fact, just to add, Nitesh, once the SM REIT regulation comes, which should come in the next 1 to 2 months, then you can liquidate on the exchange anytime. So
Exactly.
effectively, there is no lock-in period for you.
What is minimum investment amount? 30 lakhs is the minimum investment amount. Mr. Abhishek Jan has asked how much initial invested and what returns per month is in return taxable or non-taxable. Well, what's the initial invested? So let's say you're parking in 30 lakhs and what's returns per month. So if we want to really calculate and figure it out on a gross value of the entry yield, as we mentioned, 8.75, a quick maths, you just multiply that amount with 8.75% and divide that by 12 months. That's going to be your answer. That's the money which you'll be getting. Of course, there's going to be some kind of a charges, which will turn out to approximately like taxable amount. It's on a 10% will be the TDS charge. Again, if you're parking money in any of the family member or probably yourself or in the HUF name or any other body where taxable is not there, you can always submit 15G or H form. Why the investment is versus investing in mutual fund where the person is getting 15% plus? Some of you like to answer this?
Yeah, let me take this. So
Yeah.
here we are looking at 8 to 9% per annum, and IRRs of 15% plus. So if you actually compare this investment to fixed income gives you 7 to 8%, commodities gives you 8 to 9%, residential gives you 4 to 5%, large caps, which you are referring to, mutual funds, give you between 13 and 15%. So this actually gives you 14 to 18% if you're willing to hold for 3 to 5 years. So as an asset class, we actually think this investment is very, very good, and it's always backed by a real asset, which is commercial real estate. Thank you, AB.
Thank you. Mr. Bhaskar Shetty has asked, in your cost structure, a lot of indirect costs like brokerage, acquisition fee, and reserve fund are there. So let me answer you, Bhaskar ji, that when we talk about brokerage, let's as well treat this as a normal kind of acquisition when you look forward to it. So there is a brokerage involved. Number two, there is an acquisition fees. As you have seen an earlier part of the slide, when we kind of do a proper due diligence in a lot of properties. So just to acquire one particular property, there are a lot of excise and expenses in made. Like I have not put in a cost over there, Deloitte as a structure. So just to let you know in a nutshell, that's the kind of thing happens. Reserve fund is basically an uncontingency fund, which is parked on site for any kind of thing required. Well, since this SPV is going to be a private limited company and it will be showing in the ROC, there is a proper compliance. You'll be seeing the balance sheet or probably you'll see in the ROC. The fund money is not touched because the money is yours. It is automatically refunded back to you if it is not being utilized for any uncontingency fund. So we've tried to create an entire structure in such a manner that it is pretty transparent, clear, and convenient for you. Mr. Rajat Gandhi has asked, could you please give me more information on the SPV, especially on the rights of investors? Mr. Gandhi, uh, SPV is basically you are going to be the owner. We would be issuing you CCDs and shares of the SPV. The property owner is going to be the SPV, so you are indirectly the owner of that particular property. In this particular scenario, let's take an example. The total ticket size of the property is 63 crores. And let's say you park in 63 lakhs, you become a 1% owner of that particular SPV as well as the property. In terms to this, ultimately property is yours. Tomorrow, if we want to exit or do any kind of a thing in that particular thing, we cannot do that until unless there is a consent being received from you. There has to be a 75% voting right consent, and that's basically the rights of the investors in the terms of the SPV levels. Any addition you want to make it to this, Mr. Sameer, sir?
No, that's good, Abhimanyu.
Perfect. Mr. David has asked the question, how is the tax treatment on the returns? Can the rentals be mapped as interest from house property or business? What is the rationale to map it as under income? So, since this format is made under the structure of CCDs and shares, CCDs, let me give you a little layman language for everyone is there. So let's say I'm giving an example. So let's say we go to a bank gives a fixed deposit. Let's say you park a fixed deposit, and that fixed deposit gives you an interest rate. Similarly, CCD gives you interest income. And that automatically the interest coupon of this particular CCD is going to be in line to the rental yield which has been promised to you. So hence, this interest income is something which is the taxable thing, which is as per your tax slab. Hence, it has been put as other source of income, how your FD treatment is done. Mr. Harpreet Singh has asked, why is the firm period to start? What is the firm period to start the returns? So we target this particular proposition that we register the property mid or the latest by next month, end of next month. The date the property is registered on the SPV, the very next day your rental income starts. Your first rental income in this account will come approximately on 15th of October. We are in August. The asset will finish in September, and your first rental income will come on 15th of October. So just to give you an example, let's say we register this property on 25th of September. On 15th of October, you'll receive 2 credits. That will be 5 days of September and 31 days of October. Mr. Neeraj Jain has asked, so okay, I see a lot of questions flowing in, and it's a very positive side to look at. What does it mean for us that the property will be listed on REITs? Both pros and cons, please. Samir, you like to answer this?
Sure. So I think it's only pros, Neeraj, because once it gets listed on the exchange, the liquidity definitely increases quite a bit. So if right now it takes anything between 30 and 45 days, we expect the liquidity to be within 10 to 15 days or even faster. Secondly, there's price discovery. So obviously, once it's listed on the exchange, bid offers will actually decide. Both bid and offer will decide the price of the instrument. So I think there's only pros. I don't think there are cons at all. Thank you.
Great. Mr. Anand Deshpande has asked a question. In case investors want to leave before 5 years, how difficult is the process? Well, it is not a difficult process for each and every property. We, as of now, as we speak as well, have approximately a 2 crore rupees waiting list. Uh, Indeed, on our website, we have mentioned it takes around 0 days, 15 days to 90 days. And it is, of course, understood, which would make sense to all, that if we mention around 90 days, which should be an outer limit, generally, we surely try our best to get it done in 15 to 30 days. Mr. Manish Trehan has asked, why is management fee charged? Will negative performance fee be levied if IRR is below 10%? That's a great question to ask, actually. Well, the management fees is charged as good as an AMC cost to take care of the particular running the particular structure, dashboard availability, and all the other thing. Having said that, there is one additional information I'd like to give you, which will be for all the investors over here, which is a great news. Uh, we mentioned about 1% management fees. So let's say you're parking 30 lakhs, or let's say a crore, whatever number. Uh, 1% will turn out to 1 lakh if you are expecting to park in a crore, which will probably, we are not going to charge you that upfront. Let me tell you. We will charge you that on a pro rata basis, 1 lakh rupees divided by 12 months, deducted from the rent receivables. And let me tell you that as well, we will not charge you in the first year. Indeed, we have been in this particular asset, we are giving you a rental top up of 1.43% in 2 years, which generally means that over a spread of 5 years, we're just charging 3.5% approximately. Well, other part is, will negative performance fee be levied as if IRR below 10%? Well, I'm not 100%, I'm 1000% sure that we will surely make our money as well, because our margins are very low. And the very important point which you have taken part in this particular structure is the entry price point. And that entry price point particularly has only helped us to get that targeted IRR or the exit, which we have already done in the past. And we will surely achieve it. That's what our aim, and of course, which we'll surely be doing. Mr. Vishal Mayani has asked, what is the lock-in period? How does our returns get impacted in case Microsoft renegotiates after lock-in gets over? Well, there is no lock-in period for you. According to me, Microsoft is here to stay for a long time. They have already been in this particular structure from last 10 years. And this was their third renewal. Furnitures and fixtures has been done by the tenant. Indeed, when they started this agreement again, they did approximately a fabrication on the particular structure of approximately 3 crores. And I'm sure they are looking for 1, 2, 3 more tones coming ahead. As we see, the rentals, which you mentioned, is going to be renegotiated and it could be a loss of money. No, it cannot be, because ultimately the tenant is already paying a lower rental. So if you see, there's only an upside to it. So we actually expect that your rental yield might touch 10% as well after 5 or 6 years. However, that's the kind of a thing which we look at, because the rental yield going up will automatically affect and grow your base price. And hence, we will achieve your targeted IRR, which we have promised. Mr. Amanullah Rajpurkar has asked, what will be the effect of returns after migration as stated? Sameer sir, if you can.
There won't be, in fact, Amanullah, there won't be really any effect on returns because we're going to make sure that there's seamless migration and the existing investors don't get affected.
Okay. Mr. Kunal has asked, how does migration of SM REITs affect our investment in this property? Just answered by Sameer, there's going to be no changes, no effects. Indeed, it will become automatically more, give you a little more hands-on confidence that you could see your that particular stock on the stock exchange, and it is tradable, and it's more, according to me, it gets more comfortable to you that you can liquidate it much easier. Santosh Kumar Chaurasia has asked, exiting from property sometimes takes a lot of time, and what if the property is not able to sell we are not able to sell property? Well, keeping into mind, we have not got this. This is like information which you should all be aware of. We not only get this property thinking that today we have to give you good returns on this particular property, but our checklist is of course pretty big, which helps us, which we take into consideration that after 5 years we have to sell this property as well. With vacancy percentage less than 2%, Microsoft being the tenant, location next to the station, commerce zone, a AAA grade location. This location is, of course, going to be easily sold out. Having said that, we will go out in the market, get a particular proposal, share it with all the shareholders. There should be a 75% voting right as a yes, because as we all know, all are investors and they all have a simple single agenda: invest and earn. So we will surely make up to that particular thing, and this is going to be a very easy property to be sold out in the future. Mrs. Sayed has asked, rent on this property is 25% lower than the market rate to your forecast to bridge this gap before selling this particular property. I'll just repeat this. Rent on this property is 25% lower than the market rate. Do you forecast to bridge this gap before selling it? Of course, yes. So if you see, we always talk about a defined exit timeline. We talk about 5 years, but it is always between 4 to 6 years. As an investor, you will only exit when we give you the desired targeted IRR or a little higher IRR. Otherwise, you will not exit. It's as simple as that. And in order to give you income and us earn income, we have to deliver that kind of a proposition. Indeed, for a matter of fact, if you see, you mentioned clearly the 25% lower to the market rate. In the slide, we did mention around 19% lower. It automatically shows that when we renegotiate with the particular tenant or anyone who's looking forward to have that particular property, there is going to be a good upside of that particular property to receive better rental yield in the future, which automatically affect better base price or the cost of the property going up. What about reserve money? It is accruing any interest during investment period. What will we do that, and it will share investors or what? Okay, three things, sir. One is the security deposit. Second is the 5 years property tax. And third is the reserve fund. All these three of them are being parked in a fixed deposit. They put together earn an interest income, which is parked to you back in the rental yield, which is part of your rental. So yes, it is parked to you. You said minimum investment is 30 lakhs, but according to SEBI, the minimum ticket size is 10 lakhs. As a new investment, can we start with 10 lakhs amount? Well, at this proposition and time, every property has got a different ticket size. This particular proposition, we're starting a minimum ticket size of 30 lakhs, but surely we would have another properties or anything else. If it is in the same line, you can get in touch with your investment manager and we'll be more than glad to help you in investing. Can you please elaborate more on the 15% exit fees? Sure. Samir sir, you want to answer this again?
Sure. So it's basically what we call a performance fee. So once you earn 10%, so assuming we decide to exit after 5 years, and you've actually earned 50%, suppose you've earned 75% in 5 years' time after all fees. So 50% goes to you. On the 25%, we will charge a 15%. So on the 25%, we will charge 15%, which is 3.75%, which will be the exit fees or the performance fees which we will charge. Do keep this in mind that this will only be charged after we've taken into account all the performance fees. I hope that clarifies. Thank you.
Thank you, Samir. Kunal has asked a question. Are there any other charges like stamp duty, etc., over and above 30 lakhs? Well, that's a good part of the entire package. Let's say you park in 30 lakhs. It includes stamp duty. It includes registration. It includes 5 years of property tax. Maintenance in this particular property is borne by the tenant. It includes your legal fees. It includes your SPV charges. It includes your admin charges. It includes each and everything. And guess what? We're not talking about ROI just on that. We're talking about going to give you an ROI on the full 30 lakhs amount. What are liquidity options? So simple and sweet. Well, you are a holder of CCDs and shares. You can easily transfer this particular CCD share in a very normal manner, how you transfer a share from one party to another. It could be done in two formats. Number one, if you're talking about an early exit, you can transfer to any family, friends, and relatives if you want to sell it yourself. But we always suggest that you can do it through us and we get you a particular buyer, as we always have a waiting list available. That's the liquidity option available at any given point of time. In addition to this, I'd like to as well add in a point. Uh, let's say you park in 1 crore rupees and tomorrow, because of certain requirement or emergency in the family, you are in just a requirement of 30 lakhs. You can always do partial withdrawal. You can always just sell 30% of your stocks instead of selling the entire crore rupee of the stock. Mr. Manish Tirhan has asked, what legal entity is the SPV? How is your annual rent paid by SPV to investors? Well, SP legal entity is the private limited company at this moment. Well, of course, when the SEBI compliant product becomes a SEBI registered product, it's going to be a different format, and we have been categorized as micro, small, and mini REITs. Having said that, coming to current picture, how is the annual rent paid by the investors, by the SPV to the investors? The rent is paid from the tenant to the SPV, and the SPV further pays to the particular all the investors in their proportionate investment which they have made as the CCDs are issued to you. So these are basically the interest payout which comes into your account every month, 15. The IRR is calculated on the basic cost and or total acquisition cost. The IRR is basically cost on the total acquisition cost. Is the expected IRR of 15 to 16% after considering performance fee? Or we need to deduct, again, just let me, is the expected IRR of 15 to 16% after considering performance fee, or we need to deduct that from it? So while we look at this particular presentation, the targeted IRR, which is around 14.53, it is a gross IRR. Your net IRR will be approximately close to 13%. That's the answer to talk about. Again, just to mention, just a pointer with the logics keeping into place, we have not parked in that 15% discount to current market values, as well as the current CAGR, which an earlier investor had got for around 10 to 11%, but we have just taken an assumption of 6%. As well as there's a huge room of improvement on the rentals. So this 14 or 15 or even 16%, and I'm not being very optimistic or trying to be a salesman over here. I come from a wealth background. A 15% to 16% target are very much easily achievable on this particular property. Mr. Ramakrishnan Rao, is 15% performance charge before the tax or post-tax returns of an investor? It's
AB is before tax.
No, I was just trying to, I thought, yeah, okay, yeah, it's before tax. My screen was moving a little bit. Sorry. What is the taxable treatment on the investment, both rent and exit price? Samir, if you could just take this particular, I'll just.
Sure. For the rental, it's basically other income, which gets taxed in the hands of the investor. And for the exit price, earlier on, it was capital gain with indexation, which I know is being discussed with the finance minister. But right now, based on the new regulation, it's a capital gain after 1 year of 12.5%. But that might change because we are hearing that the finance minister might actually allow indexation again. Are the payouts monthly? Yes, they are.
Yes.
Yeah, sorry, go ahead.
Yep. So I see a lot of more questions. I see around 20, 30, 40 more questions coming in picture, and we have around 5 minutes left. So I'll quickly run as much as possible in the next 5 minutes and try to cover all of them. Long-term capital gain tax as per new budget, 12.5% ends its 2 years. What's your say? So yes, indeed, 12.5%. Indeed, that's the question which you had answered earlier, Samir. If you could just, you want to cover this particular point as well, because.
Yeah, so taxation now is, as I mentioned, 12.5%. There's discussions going on with the finance minister, and I think there's a very good chance that they might actually go back to indexation. So once that happens, it might actually change. But right now, it's 12.5%. In fact, I'm just looking at a lot of the questions. They're all around tax, which we've answered. There's one question around the 5% EOI money is refundable. Yes, it is refundable. If there's a genuine reason why the EOI needs to be cancelled, absolutely, it's definitely refundable. There's a question around minimum amount of 30 lakhs. As per new SEBI regulation, this 10 lakhs. we are happy to look at that. But for this product, it's 30 lakhs, but we are happy to discuss that. Can you share a recording of this meeting? Yes, we will. Does the property value appear in the SPV balance sheet at the ROC ITR? Absolutely, it does. From first month after investing, will we be getting the money, and for how long? You will start getting the rental as soon as the property is registered of 15th of every month. So you'll start getting that, and you'll get the property as long as the property is tenanted. Is there a lock-in period? There is no lock-in period, and you can exit your share anytime you want. Yes, you will not lose any benefits as such, because you will get the rental income. What is the net amount we will be getting per month after all deduction? Is basically the management fees of 1% per annum, which we'll charge, which will be deducted, and the TDS, which typically will be 10%. If the property is not able to liquidate within the locking or tenant agreement period, how do you proceed further? This is a type of risk involved for investors, or you continue to share the same monthly rental. So typically, we have a 9-month lock-in period, in the sense that the Microsoft actually cannot leave the property, and they have to give a certain amount of notice to us. Given the fact that they've been here for 10 years, we expect them to be there for another 5 years. We are very good in leasing properties, so we don't foresee any problem here. Question from Ashit: IRR of 15%, net return of 8 per year. The difference is expenses. No, the net return is not 8.75%. That's a rental income of 8.75%. We expect 6 to 6.5% capital appreciation. So the total income we are looking at is 15%. We spoke about minimum investment and 10 lakhs. Then there's a question around rental yield. Is 8.75% rental yield after deducting? No, it's not. It's before deducting the 1% management fee. So for the first year, the net is 7.75%. The IRR is calculated based on the total acquisition cost, not on the basic cost.
Right.
Take
it forward.
Yeah.
Thank you. SM REITs will not be liquid considering the ticket size. Do the 3 listed real estate REITs not become more competitive from a liquidity perspective? Well, as a matter of fact, if you look at, we have just, and you answered your question yourself, sir, Mrs. Vapril, that yes, there are only 3 REITs. So indeed, we have a room, and we would have at least 40 to 50 REITs running in the country. Indeed, with the coming of the micro, small, and mini REITs, it actually gives a great exposure and education to all the REITs coming in the market, and which are already existing in the market. So liquidity, I don't think so it's going to be a problem, because indeed, incidentally, more investors coming into picture into MSME REITs or normal REITs, it will automatically increase the liquidity better by the day. How is the decision to sell the property, final exit taken? Do the investors have a say? Of course, investors have a say, because the property is ultimately yours. As I said, we go out in the market, find a particular proposal, share it with all the shareholders. There has to be a 75% voting right as a yes, and then only be able to sell the particular property. Then there's a question which says, please inform if all of whom to contact mobile number officially to going ahead with this investment. Well, you can log into hbits.co website, create your own account, and automatically in your account, you will see your particular investment manager already allocated with the number and the email ID mentioned over there. So that's the way how you can reach it. Of course, you can as well look at the website and directly dial in on our number. Mr. Sandeep has asked, is there any other hidden costs? No, we have no hidden charges. That's why each and every A parameter, B parameter is all mentioned over here. Mr. Ashit Kothari says, how has been the rentals of existing tenants for last 3 renewals? Has there been any increase in rentals or fixed? Well, just to let you know that all the particular rentals which have been there in this property or any other property, there's always been an escalation. Till date, when I've been with this organization from last 5 years, there's not in forget about negotiation during the time of COVID. There's not been even a single delay in the payment, and there's always been as per the contract, whatever is mentioned, it's been taken care of, and there's always been the increment. Mr. Swapnil has asked, is there any referrals, incentives we can discuss about that. Uh, Mr. Santosh Kumar Chaurasia has asked, is it not big risk taking single property risk? Diversification, PMS said, but here tools, huge concentration. Well, just to let you know, we are comparing this with PMF, AIF, MF share portfolio, which is more stocks driven. Over here, we are talking about a property which has a rental agreement in place. So it's backed by a fixed rental agreement, which automatically, I will not compare it to a equity part, sir. So it is basically a fixed, the closest competition for me will be actually a fixed deposit. And when IRR is coming to picture, where the entry price point is so good, indeed, you will be making around 2x or probably 2.5x of the FD money. So this is actually changed the snapshot of the entire investment, how we used to talk about low risk, low return, high risk, high return. This could be a very low risk and a moderately high return kind of a product.
And also for Swapnil referral program, if you're an individual investor who's invested with us not through a channel partner, we have a referral program of 1% for you. And for existing investors, we have an incentive of 1% if done within the next 7 to 10 days. And you know, this property is fortunately for us filling in very, very quickly. So if you're keen, do let us know.
Indeed, when we did quite just a discussion launch with a few people around, we were already 10% funded. And while we speak, and I'm just reading the questions and I'm not looking at the particular individual inputs given, I see already close to a 3 to 4, 5 crore. Another 10% is already sold while we're talking about in this particular portfolio. So that's a good news for all of us. Mr. Kunal has asked, is the investment completely online or does investor need to presently be present for registration? No. So it is purely online. We are a prop tech firm. Just to give you a little more hands or probably confidence, 35% of our investors are NRIs. Mumbai, Pune, Maharashtra gives us kind of approximately another 30% business. Chennai, Hyderabad, Bangalore, another 30% business or 28% business. Gujarat is picking up, north side is surely picking up. Ashit has asked, can this be worked out as SWP? Not actually at this moment, because this is a fixed product owning a particular asset, hence it could not be possible. But in terms of the rental income, which is coming to us, which is basically just going to be an income for you. What is rental top-up? Well, rental top-up is basically just a kind of a parameter which negates the management fees which we are charging the first year. Indeed, that's how we are giving it back to you. As I earlier mentioned, we don't charge you the rental top-up in the management fees in the first year. That's how it is. Any special discount to the early birds or similar? Well, uh, what should I say? Well, I get this question every morning, every evening. But yeah, we currently believe in one thing. You become an investor with us, sir. And in any upcoming property going forward, we get you a particular loyalty kind of a bonus. Please share the recording of it. It will be shared. Mrs. Swapnil has asked, SM REITs will not be liquid considering the ticket size. Do the three same question. What is the net rental yield over the 5 years? The yield over the average of 5 years, if I put in net, is approximately 7.54%.
Oh,
When
gross is 8.54.
Gross is 8.54, net is 7.54. Can I invest sale proceeds of my second flat in this property? And no, you cannot, because this is you're buying CCDs and shares of a particular SPV. But it's best you can check with your chartered accountant, because one of my clients did an analysis even after paying a capital gain tax. Because when you talk about flat, it's a residential. Here you're getting a higher rental yield plus appreciation in the future. It still came into a point that my client took a decision that he wants to invest over here because there was a margin he was getting in future.
In fact, Neela, just to answer, you know, Resi doesn't give you the returns.
Exactly.
So my advice is, a big chunk of that you can definitely put in here. Resi over long periods of time have given dismal returns. So that's my advice to you. Thanks.
Please, can you again inform us how to calculate the monthly return? Okay, so simple. Whatever amount you are investing, multiply that by 8.75%, divide that by 12 months. That's your monthly gross income. I'm an existing investor. How do we proceed? Do we contact our existing? Yes, please do. And
And if you're an existing customer, you will also get a loyalty bonus.
that is right. Indeed, just as I mentioned in the period, all we need to is log into hBits website. And I see a traffic running on the hBits website as we speak. Uh, you need to fill in your KYC. KYC is verified. You just need to sign the EOI and do the payment. Everything is very seamless and very easy to go ahead with it. What is the draft passport is the mention that your company has received the status of SPV. So the draft passport is basically a private placement form, which actually gives you particular information that how many CCDs and shares are going to be issued to you. Let's say if you're parking 50 lakhs. So 50 lakhs will be mentioned over there with CCD and shares with the investor name and the SPV name and all the details mentioned. As I mentioned, we are very clear and nothing is hidden. Who is the developer? K. Raheja Corp is the developer for this particular property. Rental in the form of SPV can be tax efficient. SWP. But SWP is not possible in this particular thing. Is rental agreement copies shared with investors? Well, we can always do a check on that. And if required, you can get in touch with the investment manager. We will surely happen to share it with your screen share basis. As Microsoft would really like to not to share it on public, and we can surely show it to you on a screen share basis. What are the financial implications for NRIs? Well, everything remains same in terms of the NRI people investing. Who all can invest? Thank you for asking me this question. So HUFs, private limited company, LLPs, all of them, individual body, trust, all can invest with us. Particularly, as you mentioned, from NRIs, the only difference is that, let's say you're sitting in US or let's say Singapore. There's something called a tax residential certificate which you need to pick up. Okay. A lot of people, I'm just saying, a lot of people come and look forward to invest in the family members' name who are based in India and they invest on their mother's or father name. Having said that, if everyone is earning a 30% tax bracket, it's a good problem to have. Uh, well, if you are submitting the TRC, which is a tax residential certificate, then it is just a 10% TDS cut. If the TRC is not shown, then it's a 30% TDS cut. However, you can always claim it at the end of the financial year from the particular government.
So,
So there,
Amanala, it's basically to answer no financial implications.
okay,
You pay your Indian taxes.
exactly,
If you give a residency certificate, which I gave as a Singapore citizen, the TDS is 10%. So
right.
that actually helps you. Yeah.
Can the 30 lakhs be split between two
Yes.
to three family members? Yes, we can do that. What about ROI, minimum investment? The ROI is 8.75% entry yield gross, minimum investment 30 lakhs. Can foreign investors invest? Not talking about NRIs, but foreign nationals. So we can expect money from OCIs. In terms of the foreign nationals, we can surely invest, but at this moment we are not taking that particular picture in because it comes as a direct. It's not the INR. It is treated as a FDI investment into a particular SPV. So that's a different structure. We can surely talk about it with the kind of a volume and the money coming in. We can surely talk about it with Siddharth.
No, but Abhimanyu, just to add, once we are regulated
Mhm.
in 2 months' time, then the foreign nationals can also come in directly.
Exactly.
Yeah.
Yes. So I guess, Samir, you should answer this question. Are you personally invested in any of the...
Yes. Yes. To answer your question, yes. I personally have a lot of investment also. And it's been great because you get your rentals on time. You can exit anytime. So it's been actually very, very good for me.
And I'm as well probably in one or two properties. So it's all working good. Uh,
So in the case of TRC for Singapore, you still have a 10% tax because I'm based out of Singapore, so I know that, and I need to pay taxes in Singapore, in India. I don't know about UAE and Mauritius though.
But it's the same going to be the scenario where, though there is no tax for uh, like in Gulf or Saudi or GCC, there is no tax, but TRC is something which you need to furnish to the particular Indian government that whatever income you're earning in India have to be paid, tax paid. And that's how we all know how it works out. Why don't we don't have
You
tax in
don't have you don't have tax in Qatar, that's fair, but income in India, you need to pay taxes. So that's an Indian tax law. Uh, and even if you have double tax treaties, you can try to use that, but you still have to pay Indian taxes. So, for example, for me, though there is no interest tax in Singapore, there's no capital gain, but I still have to pay taxes in India. But that's because that's a rule in India, and I don't think you can avoid that.
So we need to, yes, we need to. Or else if you don't want to take that particular expense because it is all available online, you can finally take the tax credit or submit your ITRs in India and takes a tax rebate. That's how it works. Well, I guess okay, there are more questions.
No, so Swapnil has a question. Yeah, you are right.
Hmm.
Once the SM REITs are listed, which I think should happen in a couple of months' time, that you need to have separate demat accounts for different family members. So yeah, that's what it is, because in case of SM REIT, they want demat accounts. So you'll have to have separate demat accounts for different family members. Harpreet says, to elaborate on exit fee again, it's 15% exit fee over a 10% hurdle rate. So if you earn 25% net after 10% hurdle rate, we will charge you 15% over the 25%, which is 3.75%.
Right. There's a question from PM. What are the factors that will lead to a rise in the property value in 5 years, given that it's a 10-year-old property? 10-year. Well, just to let you know, the longevity of any kind of a good A-grade commercial property is at least 50 to 60 years. And we are talking about just a 5-year scenario from now. Uh, like you can even think of the buildings of, kind of a complexes around where AAA grade glass facade buildings. At this moment, this particular location, the biggest tick mark is always that what is the vacancy percentage in the particular location and around. If it is the lowest vacancy percentage, that particular location will always be in demand. Once in demand and no supply, automatically increase the price. So as I mentioned, our earlier investor had made around 11% annually just on the property appreciation. In our books, that is the Excel sheet we have just mentioned, for 6%. Please explain the performance fee with example. Well,
That we've already explained.
yes. As a part of REIT, do we get property
Yes.
appreciation benefit? Or yes, you do get.
You get capital appreciation here also, including rental yield.
And I'll request all of you, since you'll be logging to hBits portal, your investment manager is already aligned and been appointed for you. I'm all available. You can always reach out to all the investment if required a one-to-one meeting or a one-to-one call or a Zoom call or a meeting anywhere. I'm all available at any given point in time for all the time zones. Thank you,
So,
guys. Okay.
so
There's.
just to summarize,
Mhm.
we think it's a great opportunity. Microsoft as a corporate would not go into any building which is not grade A plus. Um, the investments have started coming in, and like we said, we already close to 20% done. So urge you to do it very, very quickly. And and the return will be monthly paid to you in terms of rental yield plus capital appreciation. So do reach out to Abhimanyu and the team, And if there's anywhere where I can answer the questions, happy to do that.
So I'll thank you, Samir. I'll just quickly run only exactly for the next 2 minutes. Uh, Property, AAA grade. Location, amazing. Vacancy percentage, less than 2%. You're coming into the property at a good entry price point, at least a 15% discount to current market values. Tenant, Microsoft. Construction or developer, K. Raheja Group. You're looking at furniture and fixtures done by the tenant. Property escalation price year on year, 5% to 6%. We see a great room on this particular number. Please go and log in and surely enjoy this particular benefit as soon as possible. Thank you very much for again taking out time and attending this particular meeting. We see that we have already passed by around 15 or probably 17 minutes. Thank you for taking out time. And again, I see more questions over there, but yeah, please, investment managers will be more than glad to answer you that. Thank you, everyone. Thank you, Samir.
Thank you, Abhimanyu. Thank you so much. And thank you, everyone. Thank you.
Thank you.